Hey everyone, welcome back to Chip Stock Investor IPO edition. It's Nick and Kasey.
Yeah, it's hot outside. We're hot. The dog is hot.
The stock market's hot.
Margaret's hot. Let's talk about Figma in this IPO edition.
But before we continue, quick word from the sponsor of today's video, Fiscal.ai.
Even if you were trying to get a handle on a new business like Figma that is yet to debut on the stock market, Fiscal.ai's fantastic chat feature can help you get a great breakdown of a business. It pulls a lot of information and data from something like an IPO filing, or if you're trying to figure out a business based on its annual reports, its 10Ks. It's a great way to very quickly parse through those very large, boring documents and extract the information that you need to make an educated decision on whether or not a business is worth your time and your money.
You can get 15% off any paid plan with our link in the description below or here on the screen, fiscal.ai/CSI. That's 15% off any paid plan, fiscal.ai/CSI. So where does Figma fit into the hierarchy of economy? Up at the top, they provide products and services. They're a software company.
Yeah, and specifically end market product. So the biggest part of the hierarchy of the economy, we're talking many hundreds of billions of dollars a year spent on this type of software. In fact, Figma said $1.2 trillion is the expected investment in this type of very end market business and consumer type of software this year. 1 billion plus apps, 33 billion total addressable market specifically for Figma. So very tiny sliver of this very large pie. And so what do we always say?
There's no moats in software.
None. But with an addressable market that's this big, we're going to talk about the Figma business strategy. It's actually a pretty well-beaten path that they are going to utilize. It's been pioneered for them already. So lots of room for them as a fast-moving business, a fast card to carve out lots of sales and future profit.
Here's the goal of Figma. They started back in 2012. They wanted to eliminate the gap between imagination and reality, getting design software from the brains of the creators onto the paper, so to speak.
Here's the visual that they show in their IPO filing. Top left quadrant of this slide. It's kind of a mess if you're trying to develop an app, a software product. And in fact, we had a write-up on this, I think it was early last year, about thinking about software as just another manufactured product. Historically, that really hasn't been the approach of software developers. Software developers tend to think in terms of code and minimizing steps, getting more efficient. And that can create a mess, especially when you have this complex product that needs to be made. You have a lot of different people, or in many cases, a lot of different teams involved with trying to get the idea launched. And then the developers have no idea what any of these people are talking about. And so Figma is a way to get everybody on the same page. They've illustrated on the right-hand side there, cloud-based collaborative tool to get an idea down, visualized, and then convert that into an actual product by the developers. And so they have all these tools, they're illustrated on the bottom now, that help make that possible. So they call it Fig Jam. That's cute, like a music jam session, to create ideas, visualizing those with Figma design, and then taking those designs and start building the actual app there on the right. Interestingly, they also have gotten into the marketing side as well, which is something that Adobe, of course, did last decade. They bought a company called Magento. So Figma Buzz. We'll get into that here momentarily. I think the growth strategy for Figma, again, well-beaten path that they're going to utilize here in their expansion story. But here's a little brief look at what the part of the platform looks like and how it works.
You can find this on Figma's website. Just an illustration of what it may look like when you're developing apps with various creatives being able to work on the same project at the same time. And it's all updated in real time in the cloud. What kind of plans does Figma have? They're a subscription-based business. They have a starter plan that's free that hopefully someone will use and then continue on into some of these other plans. A professional plan designed for individuals and small teams, and then an organizational plan that's designed for businesses with multiple teams, and then the highest tier enterprise plan designed for businesses that are managing multiple products or brands.
They mention elsewhere in the IPO filing that these big enterprise customers, an increasing number of them, paying Figma well in excess of $100,000 per year. And as Figma adds more functionality to its platform, the number of those customers paying 6 figures or more, 7 figures to Figma, we would expect would increase. Big question here, though. Why is Figma having its IPO? A lot of this is boilerplate, especially that first paragraph there. The important part here, though, from this boilerplate statement for the IPO, Figma may also use a portion of the remaining net proceeds for the acquisition of or investment in technologies, solutions, or businesses that complement our business. So remember, there are no moats in software, especially end market SaaS like Figma. But what's the well-beaten path? The strategy for continuous fast expansion for Figma? There are a lot of SaaS companies that were successful in trailblazing this. Salesforce, the original, developing a steady stream of bolt-on acquisitions to enhance what they already do, or add new functionality to their platform, is the way a no-moat software platform like this can remain a fast car and continue to grow. But it's going to boil down to a good playbook for mergers and acquisitions. This is where faith in the management team is going to come in, and why placing small bets on companies like this is the way we approach it.
Time for some financials.
Yeah, because Figma has been a fast car.
Their revenue grew 48% in 2024 and 46% in Q1 2025.
But I think that the end of the story is stock-based compensation, as it always is first year of an IPO, is going to be high. You're going to see these share counts increase dramatically, like we have highlighted in the table on the right. So that may be a risk that's unpalatable to you. Fast-growing business. They are GAAP net income positive in Q1 2025, but not much. And a lot of that is going to be because of the stock-based comp. But you back out the stock-based compensation, and actually things look pretty good.
Free cash flow margin on an adjusted basis, significant increase over the last couple of years. Most recent quarter, over 41%, up from 31% in the same time last year.
And so as we get some operating results in subsequent quarters after the IPO, we'll be able to start measuring Figma's free cash flow per share metric, which will include the effects of the stock-based compensation. However, just remember, first year of the IPO, it's going to be really, really messy to the point that it may not even be meaningful. So we'll just have to monitor and try to figure out what stock-based comp is actually ultimately going to look like starting in year 2 after the IPO. Brief note here on the balance sheet, this is also good. This number is going to go up after the IPO by some amount. $1.5 billion in cash, no debt. So they have a full gas tank to go out and make those acquisitions they said that they want to make. Back to stock-based compensation, I just want to dwell on this again. Besides paying a lot of employees, engineers, the sales force, so on and so forth, Figma's co-founder and CEO was awarded this obviously part of the IPO proceedings. This might look familiar to you. This stock price target payout. Maybe this reminds you a bit of the stock price performance payout for the trade desk and Jeff Green. Mr. Fields, the CEO of Figma, something very similar, is going to be highly incentivized to increase the stock price over time because he'll have a lot of stock-based compensation on the line as a result. However, that is also going to be dilutive to you as a shareholder. So stock-based comp, we can adjust for it using GAAP net income, of course, but free cash flow on a per share basis will be a key metric to watch here. This is also in the IPO filing on page F6, just kind of shows the table of the employee stock-based comp, where it's coming from, and the total dilutive effect through December 2024. So this table will get updated as time goes on after the IPO and will be something to watch to see where the SBC is and what's going to continue after year one of IPO, and then which stock-based comp will taper off. Let's talk a little bit about competition. The big competitor, of course, is Adobe. Adobe does a lot in creativity software. And then again, there was that acquisition of Magento in the 2010s. Salesforce also participates in this market. But things have obviously changed a lot in the last 10 years. Building apps has gotten more complicated. Marketing those apps to prospective customers is also difficult because there's a lot of apps out there now. And so to boost its capabilities in helping customers actually build apps based off of ideas, Adobe was going to pay $20 billion to acquire Figma in 2022. Pretty wild, right? If you remember the revenue in the top left there, in the year ended 2023, Figma did $505 million. So when the proposal was made in 2022, Adobe was like going to shell out $20 billion for a company doing like $250 million in revenue at the time.
It was a good deal for Figma.
It was a great deal for Figma. Anyways, the deal ultimately fell through though. There's the Adobe stock price when they said they were going to pay, but then the whole AI thing happened and everyone was like, well, maybe it's actually a great idea for Adobe. That's kind of when we got skeptical about Adobe's stock price the last couple of years. Way too much AI optimism. Things have come back down to earth again, basically where you started 3 years ago. Proposed merger got shot down though, right?
Yeah, exactly. 15 months after they started the process, Figma and Adobe decided to part ways. They didn't see any path forward. And Adobe had to pay Figma $1 billion for stopping the merger.
And there was a reason why regulators had their hackles raised over this, right? Adobe's already a dominant company. I think everybody knows that and believes that, whether they have ever used an Adobe creative product or not. But what were the regulatory concerns here that got this shot down? Just Adobe having too much power, too much reach, pricing.
All of the above.
Regulators want end market software to remain highly competitive. And so this will also eventually be an issue for Figma. But as a smaller upstart at this point, they have a lot of runway to make those strategic acquisitions. Adobe's mistake was they waited too long versus Salesforce made lots and lots of very small bolt-on acquisitions for the first 2 decades of its existence, starting in 1999. Adobe kind of made more infrequent purchases, acquisitions, and then tried to go too big, too late. Figma, let's see how they'll do this, but I think they're going to take the Salesforce methodology and make lots of small bolt-on acquisitions right out the gate to kind of build out their platform and build out some sort of sticky platform for their users.
We fully believe that Adobe is a great company. We're users of Adobe. We don't own the stock anymore in our portfolio. We got out a couple of years ago, but we've discussed a lot of the progress that Adobe has made and maybe some lack thereof over on our Discord server. But I think Figma is definitely an IPO that we're interested in. And I think versus jumping into Adobe at this point, Figma may be a better fit for our portfolio.
Yeah, I mean, Adobe looks like it's a value again after a couple of years of rough stretch. Like you said, we did have a position we sold when the stock was running hot during some of the AI pump. Obviously, Figma is going to have some of that as well during this IPO process. But we like the product. We like the roadmap that they've shared so far for their path forward. And Obviously, they've been able to build a business, a very strong software business, in spite of a fiercely competitive industry that they participate in. We kind of like this story. We think this has the potential to be a many, many years or multi-decade even compounder, just based on what we see at this early stage. So we'll more than likely be taking a very small position and possibly building from there. Check us out over on Semi Insider. We'll be talking a lot more about Figma.
Yeah, our Semi Insiders know what we're doing first. So check out that membership link in the video description below. You can access that on our website, chipstockinvestor.com. We'll see you all again very soon. Take care, everybody.